Your brain was built to keep you alive on the savanna, not to make money in markets. And that single mismatch is quietly draining trading accounts all over the world.
Wait, hold on. You're saying the reason people lose isn't that they're dumb or lazy, it's that they're using a Stone Age brain on a modern chart?
Exactly. The same wiring that kept your ancestors from being eaten is the wiring that makes you panic sell at the bottom. It's not a flaw. It's a feature, just running in the wrong environment.
Okay, that actually reframes everything. So most trading mistakes aren't personal failures, they're evolutionary leftovers.
Right. And once you see it that way, you stop beating yourself up and start out-engineering your own instincts. Let's break down exactly how this ancient hardware sabotages you.
Start with the big one, fear. On the savanna, fear was fantastic. A rustle in the grass? Run first, ask questions never. The cost of overreacting was nothing. The cost of underreacting was death.
So our brains are tuned to treat every threat as life or death, even when the threat is just a red candle on a screen.
And here's the kicker, your amygdala, the fear center, can't tell the difference between a predator and a drawdown. A losing position triggers the exact same fight or flight chemistry as a charging animal.
Which is why your heart races when a trade goes against you. That's not weakness. That's adrenaline doing the job it evolved to do.
And adrenaline is brilliant for sprinting away from danger. It is terrible for making a calm, probabilistic decision. Blood literally moves away from your thinking brain toward your muscles.
So in the exact moment you need clear judgment most, your body is shutting down the part of the brain that provides it.
That's panic selling in a nutshell. You dump at the worst possible price, feel instant relief, and call it discipline. It wasn't discipline. It was flight.
Okay, so that's flight. What about fight? Because I think that's where revenge trading comes from.
Spot on. When a threat can't be outrun, the ancient response is to attack. Lose a trade, and your brain treats it like a personal insult, something to be conquered immediately.
So the trader doubles their size, jumps back in without a plan, and tries to win the money back right now, fighting the market like it's an enemy.
And the market doesn't care about your honor. Revenge trading is just fight or flight wearing a business suit. It feels powerful and it's almost always destructive.
Let's talk about another savanna gift, loss aversion. I've heard losses hurt about twice as much as gains feel good.
They do, and there's a brutal logic to it. To an ancestor barely surviving, losing a day's food could be fatal, while a bonus meal was just nice. Avoiding loss mattered more than chasing gain.
But in markets that asymmetry flips against us. We snatch tiny profits because we're terrified to lose them, and we let losers run because closing them makes the pain real.
Cutting winners short and writing losers down. That's the opposite of every rule, and it's driven by a survival instinct that's thousands of years old.
Then there's the herd. On the savanna, going with the group was safety. The lone human who wandered off got eaten.
So when everyone's euphoric and buying, your brain screams join them. When everyone's panicking, it screams run with them. Belonging felt like survival.
Which is exactly why crowds buy tops and sell bottoms. The instinct that kept the tribe alive is the instinct that makes you arrive at every party right as it ends.
And don't forget pattern seeking. Our ancestors who saw a face in the bushes and ran lived longer than the ones who didn't, even when it was just shadows.
So we see trends, signals, and certainty in what is often just random noise. The brain hates randomness, it would rather invent a false pattern than accept it doesn't know.
So if all of this is hardwired, are we just doomed to lose? Because that's a bleak place to leave people.
Not at all, and this is the whole payoff. You can't delete the instinct, but you can build a cage around it. Predefine your risk before you ever enter, so the savanna brain never gets a vote.
Position sizing is basically removing fear's volume knob. If no single trade can hurt you, your amygdala has nothing to panic about.
And a written plan is you, calm and rational, making decisions for the future you who'll be flooded with adrenaline. You're outsourcing the choice away from the caveman.
So the real edge isn't a secret indicator. It's recognizing that your own brain is the counterparty, and trading like you know it.
Losing isn't a character flaw. It's your default setting. Winning is what happens when you build a system that protects you from the most dangerous animal on the chart, yourself.